I would now like to hand the conference over to Mr. Abhishek Puri from Axis Capital Limited. Thank you, and over to you, sir.
Thank you, Janice. Good afternoon, ladies and gentlemen. On behalf of Axis Capital, I am pleased to welcome you all for the Indian Energy Exchange Q2FY21 earnings conference call. So we have with us the management team of IEX, which is represented by Mr. Satyanarayan Goel, who's the non-executive chairman of board, interim managing director, and chief executive officer. Mr. Vineet Harlalka, chief financial officer, and the entire management team. We will begin with the opening remarks from Mr. Goel, followed by an interactive Q&A session. So over to you, sir.
I welcome you all to the Q2 fiscal year 2021 earnings call of IEX. I hope all of you, your teams and families continue to stay safe and healthy. While we are still coping up with COVID pandemic, efforts are being made across the country to revive the economic engine and cautiously moving towards the business as usual. As a critical part of the energy and power sector ecosystem, the exchange continues to be committed to facilitate the distribution utilities and industrial consumers in procuring 24/7 power in the most competitive, transparent and efficient manner. The Q2 of the fiscal year 2021 has been a significant one for the IEX. During the quarter, we witnessed the launch of yet another new market segment, which is green term ahead market. We continued momentum on our customer outreach efforts to disseminate awareness and build capacity through various webinars as well as one-to-one digital engagements. We upgraded the technology platform to support the green markets. We further strengthened our subsidiary IGX through equity infusion as well as filed application for approval with the PNGRB, the gas regulator. With these and many more initiatives, we could achieve and sustain a positive momentum in terms of our business and financial performance, even during these unprecedented times. We acknowledge and thank our members, clients, employees, and all our energy ecosystem partners for their continued support. Now I'll talk about economic and industry update. Overall, the second quarter of fiscal 2021 saw significant relaxation in the lockdown restrictions across the country. We saw a sharp recovery in industrial activities in the month of August and September 2020. This is evident from the fact that Nikkei manufacturing PMI for the month of September 2020 rose to 56.8 from 46 in July 2020. Notably, September witnessed the highest manufacturing PMI numbers in the last 8 years, which is an encouraging sign for the economy. With an increase in economic and commercial activities, power demand also returned to pre-COVID levels. In September 2020, India witnessed 4.6% year-on-year increase in the national energy consumption. However, due to slump in the months of July and August, overall national energy consumption declined by 0.5% in Q2 on year-to-year basis. India's total installed power capacity has reached 373 gigawatt as on September 30, 2020, an increase of 3% on year-to-year basis. In line with the national vision to increase the share of renewable energy and its efforts to fulfill its commitment under Paris Agreement 2016, the renewable energy capacity has registered at a rate of 8% growth. As on 30th September 20, India's installed renewable capacity has now increased to 89 gigawatt and constitute about 24% of the total installed capacity. On the regulatory front, during the quarter, Uttar Pradesh Electricity Regulatory Commission issued draft merit order dispatch and power purchase optimization regulations 2020, aimed at improving the efficiency in generation and power procurement in the state. The regulation rightly recognizes the exchange-based short-term power market as a possible avenue for power purchase by distribution companies and for efficient and cost-effective optimization while meeting the state's overall demand-supply situation. Similar such regulations are already in vogue in the states of Delhi and Maharashtra and serve as a precedent for other states in pursuing an efficient merit order dispatch for procurement of electricity. As regards the gas industry, PNGRB issued final gas exchange regulations on September 28, 2020. which is a significant development for the gas market in India. It will mobilize the market and should hopefully accelerate the pace of gas trading. Financial and business performance. On a standalone basis, the quarter witnessed 4.9% year-on-year growth in revenue from operations on account of an increase in volume. However, due to decline in treasury income, overall revenue increase in quarter 2 by 0.8%. Profit before tax increased by 1.5% on year-on-year basis from 60.65 crore to 61.56 crore. This is profit before tax. PAT at 46.7 crore was down by 4.4% as compared to 48.82 crores in quarter 2 of FY20. Last year, PAT was more because of one-time tax benefit of rupees 3.7 crores. The electricity volumes on the exchange witnessed an increase of 13.2% year-on-year increase in quarter 2 and stood at 16.486 billion units as compared to 14.56 billion units in quarter 2 of FY20. The REC trading could not take place during the quarter owing to stay order from Honorable FL, and hence the total volumes including REC saw 3.8% year-on-year growth during quarter 2 of FY21. The day-ahead market on the exchange continued to see robust volume on the sell side, with sell side volume of 2.2 times of the cleared volume. The market witnessed average clearing price of 2.53 rupees per unit, a very competitive price. And last year, during the same quarter, it was 3.15 rupees per unit, and a decrease of almost about 20% in the clearing price. And this enabled the distribution companies and industrial consumers to take significant cost advantages by purchasing power to the exchange. Attractive prices also led to 40% year-on-year increase in the open access volumes on the exchange platform. The real-time electricity market, which was launched on 1st of June, also continued to witness robust volume and traded 2.350 billion units of volume in quarter 2. On a cumulative basis, market crossed a milestone of 3 billion units on 6th of October this month. Quarter 2 initiative, we are pleased to inform you that in line with our efforts to commence trade in the long duration delivery based contracts, we have filed a petition with CERC for its approval. Simultaneously, the exchange is working towards ramping up its market operations, business, communications, and technology infrastructure to support commencement of trading in the new market segments. During the quarter, we launched a new market segment, Green Term Ahead Market, on August 21st. The market witnessed an encouraging response from the participants with cumulative traded volume of 75 million units. On every day, we trade almost about 1,000 megawatts during the peak hours. On the first day of the launch of G-Term, there was participation of only about 6 participants, and today we are seeing participation of almost about 40 participants on daily basis. And average volume is about 8 to 10 MU per day. IEX continues to strengthen IEX platform. The IEX platform through various capacity building initiatives and investments. They have also filed application with PNGRB for the authorization, and being a regulated entity would bring in more credibility in the platform, enabling greater penetration of the gas market. We continue to undertake various policy and regulatory advocacy, market development, as well as customer outreach initiatives with an aim to build the pickup of positive trade momentum. While COVID-19 has adversely impacted the energy and power sector, a favorable policy and regulatory framework could unleash transformation in the sector. We feel time is opportune to establish a new market-based energy order which is forward-looking and consumer-centric for India's economic growth. IEX is committed to support this transformation and ensuring reliable energy and power procurement in the most sustainable, efficient, and flexible way. Thank you. I and my colleagues would be pleased to answer your questions now.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Before we start with the question answer session, a reminder to all participants, please limit your question to two per participant. You may rejoin the question queue if you have a follow-up. The first question is from the line of Mohit Kumar from IDFC Securities. Please go ahead.
Yes, good afternoon, sir, and congratulations on good set of numbers. Sir, two questions, sir. Firstly, sir, what is the expected timeline of power market regulation, and does launch of TAM require only CRC approval, or it requires, the power market approval and Supreme Court, judgment? This is the first question.
Yeah. Power market regulations, we were expecting them to be issued in the month of September. But then, as you are aware, because of the Supreme Court order, two of the members are now on leave. So the quorum is not available in PRC. So only when member law is appointed and other members are allowed to function, I think then they will take up this PMR activity. So nothing can be said right now when the PMR will be issued. As far as long duration contracts are concerned, we have filed our application with CRC for approval, but CRC will take up the approval only after the jurisdiction issue is settled by the Supreme Court. So we have filed this petition basically to save some time, the procedural aspect of the time. Otherwise, CRC will give the approval only when the Supreme Court issue is settled.
When do you expect Supreme Court approval to be in place, sir?
Very difficult to say. The application in the Supreme Court was filed by, it was a joint application of the parties who had filed the case, which is SEBI, CRC, Ministry of Power, and it was done about a year back. And during this COVID time, unfortunately, only urgent matters are being taken up. So this hearing is getting postponed. And the hearing was to happen on 8th of October. It has now been shifted to December 1st week.
Okay, sir. My second question on the gas.
It is getting shifted from the last 7-8 months, so we can't really say whether it will happen in the month of December or not.
Yes, sir. Understood, sir. Secondly, on the gas volumes, of course, last quarter was very muted. How do you think, gas volumes in the next few years? And do you think that all the enablers, for creating a gas trading market are taking shape? And if you think that, can you just update on all the enabling regulations, which can materially lead to increased trading on the gas exchanges?
See, when we started electricity exchange in 2008, at that time, all enablers were in place for starting the electricity exchange. Enablers like we had a system operator, which is NLDC, RLDC, and SLDCs. There was a deviation settlement mechanism, which was in the form of UI. We had open access regulations by CRC. There was non-discriminatory open access to all participants. So there was no taxation on interstate sale of electricity. So all these issues were settled, and the trading of electricity became a reality from day one when we launched this IEX. In case of gas exchange, we knew that many of these enablers are not in place. But then, even to get these enablers in place, there is a lot of policy advocacy to be done. So we want this exchange. Some activities are happening, but then transaction in a big way will happen only when these enablers are in place. First thing is our market gas exchange regulations. We launched the gas exchange on 15th of June. In the month of July, the draft regulations were issued, and after the public hearing, the final regulations were issued on 28th of September. So that is one enabler which is now in place. PNGRB again has issued draft regulations for the access code and also to to issue regulations for the gas transportation tariff. And they are again coming out with a simplified gas transportation tariff number, which is required for the exchanges. So that is another activity which is work in progress. Gas is unfortunately not under GST, so different states have got different taxation on the gas, and because of that, it is very difficult to introduce standard contracts on the gas exchange. We are working with the government. What we understand is that government has already referred this issue to the GST Council. Hopefully, that should also happen in the next couple of months. System operator, for that also, Goel is already working in this area. They have in one of the office all pipeline metering systems are. All those activities have been provided. All information systems are available now with them. They are also going to do this data gathering from the other pipeline operators. But I think system operator also will be operational maybe in the next couple of months. So this all the enablers is work in progress. It may take another 5-6 months, and only thereafter we will see gas trading in a big way. Even if you look at the infrastructure part of it, gas, LNG terminals, regasification terminals. Today we have practically only 2 regasification terminals which are operational, which is by Petronet and Shell. Petronet terminal is overbooked, operating on more than 100% capacity under the long-term contracts. Shell terminal, they are also practically operating on 100% capacity. So if you want to develop the market, I think we need more terminals so that there is spare capacity available for the traders who want to bring cargo and sell in the market. A lot of activities are happening now on the regasification terminals. I understand work is happening on 5-6 terminals, and maybe 2-3 terminals will get commissioned in the next 1 year. Pipeline also, a lot of work in the eastern and southern part of the country is happening there. So we should see a interconnected gas pipeline network in the country the way we have for the electricity. And that will be the time when we will have real good volume on the gas exchange. So what we are doing at the moment is an investment in the gas exchange and creating all these enablers. And I'm sure about one thing, that opportunity in the gas exchange is much bigger than what we are doing in electricity. Because in case of electricity, 90% of the transactions are happening under long-term contract. The short-term market is very small. In case of gas exchange, already the short-term market is almost about 15-20% of the transactions are happening through the short-term market-based spot contracts. And going forward, most of the incremental quantity is going to happen under the spot contracts. So the opportunity for the gas exchange is much larger.
Understood, sir. Thank you.
Thank you. Before we take the next question, a reminder to the participants again. Please limit your question to 2 per participant. You may rejoin the question queue if you have a follow-up question. The next question is from the line of Nikhil Upadhyay from Securities Investment Managers. Please go ahead.
Yeah, hi. Good afternoon. Am I audible?
Good afternoon. Yeah.
Yeah. Hi, sir. Sir, my question is on the RTM market. So the earlier idea was that when we will launch the RTM market, there would be a shift of the market from the DSM to the RTM. Just wanted to know, but what we have seen is that the RTM has cannibalized the TAM market. So how are you seeing, is there a shift which is happening from DSM to RTM, and how are you seeing the scale up in the TAM market? That is one. Secondly, on the long-dated contracts, when we talk of volumes of 20 billion units and on the green TAM and all, do you see there could be similar cannibalizations which can happen from our existing volumes?
Yeah, RTM market, initially we thought that a substantial part of the DSM will get shifted to the RTM market. But actually what has happened is our intraday TAM transactions, they have now reduced practically to zero, and the transactions have got shifted to the RTM market. because that makes a lot of sense also. Now distribution companies can buy on real-time basis and at a competitive price. At the same time, in fact, the volume in the RTM markets are much more than what we used to do in the TAM market. So good part of the volume is also the additional volume for the exchange, because of the competitive price. Many of the states are replacing their high variable cost power by purchasing power in the real-time market. We are working with the states. We are doing analysis of the power drawn by the states under the DSM, what kind of penalty they have paid, what kind of at what rate they have overdrawn their power, and does it make sense for them to purchase power through the replace that DSM power by the exchange power. We are doing all that kind of analysis, trying to interact with the states, and I'm sure it will take some time, but even some shift from the DSM to RTM should also happen.
Okay. And secondly, on this long-term, long-dated contracts and the new products which we are launching, where we believe the volumes of 20 billion units, additional volumes come up, do you see there is a risk of cannibalization of existing volumes there as well, or how do you see?
In the long duration contracts, I don't think there is a risk of cannibalization of the TAM market, because TAM market is on day-to-day basis, which is the difference in the demand and supply of the distribution company which they purchase from the market. Long duration contracts will be basically getting volume from the bilateral market. Today, bilateral market, our volumes are also about 40 billion units. So maybe part of those volumes will get shifted to the long-term contracts.
Okay, fine. Thanks a lot, sir.
Thank you. The next question is from the line of Devansh Nikodia from Sample. Please go ahead.
Yeah, thanks for the opportunity. Sir, my question was relating to long duration contracts, where earlier we highlighted that we will be looking for reverse auction pricing structure, which is basically similar to what is actually happening right now in the platform. So, and I think there are no transaction charges on the platform as of now, and we will be taking transaction standard 2 paisa per unit. So, I mean, what will be the value proposition that we'll be offering for which, volumes on bilateral will shift on our exchange? So if you can just throw some light on that.
See, on the D platform, it is only discovery of price which is happening. Once the price is discovered, then the D platform will indicate who are the sellers who are willing to sell power at this rate, and it is up to the distribution companies to enter into agreement with those sellers. And then future delivery, financial and physical settlement is happening between the DISCOM and the sellers directly. So D platform is only doing price discovery. After that, the role is over. In case of our long duration contracts, there are going to be auction mechanism. There is going to be another matching mechanism also. But under the auction mechanism also, we will do physical and financial settlement also. We will take open access and ensure that supply of power under the contract and supply to the distribution company and payment to the generators on daily basis. So that is the value add which we are going to provide.
Okay, so responsibility of the payment and delivery of the volume, which is the edge.
There will be counterparty to all these contracts.
Okay. And in case of REC, I mean, there was this news flow where the APTEL has actually concluded that REC trade can now continue. So if you can just re-clarify on that, and when can we see REC volumes back on the exchange, if you have any visibility?
APTEL has not concluded that. APTEL has concluded the hearing. Order is reserved. We are expecting order in this week so that REC trading can happen on 28th of October. That is what we are expecting. Because market participants, they are all requested APTEL that for 3 months trading has not happened. So they should issue the order before 28th so that the trading can happen on 28th of October. So we are waiting for the order.
Okay, and if you could just throw some light on the increase in employee cost by, I think it has increased by 10%. So if you can just divide it between increase in number of employees and increments that we have given, if any, and other income. I mean, it's Normally we do a run rate of 11 crores and it's been 8.5. So if you can just elaborate on these two differences.
I will request Mr. Vineet, our CFO.
Thanks. First of all, I'd like to answer on the treasury income. You rightly said the treasury income during the September 2019 quarter, we had around 11 crores, and in the June it was around 13 crores on the consolidated basis. But if you look at the trend in the interest rates, the interest rates had fallen significantly. And in the June, what happened, because of the first quarter when the interest rates were reduced significantly by the RBI because of the COVID thing, so there was a lot of mark-to-market gain which we got in the first quarter, which is in the range of around 5 crores. And if you look into the overall our treasury side, which is in the range of around 500 crores, and if you compare the lower interest rate in comparison to the September 30, the net impact is around 5 crores. So because of the lower interest rate, that is the impact. The June was the exceptional quarter because of the mark-to-market gain what we have got because of the lower interest rates. So this was the one factor I hope will take care of your treasury part. Now we look at the manpower cost. Manpower cost has increased 10%, but if you look into the launch, we have a lot of new contracts we had launched. RTM is a 24-hour market and others for which we need the manpower, and the annual increments impacts were there. And there was a lower interest rate, so there was some add-on provisions for the gratuity and the provisioning of the actuaries were there. These are the basic factors, but looking at the overall structure of the site, I think now we have reached at the level where we are going to sustain on this cost for at least for the near term.
Okay. And what would be the average yield on the bonds right now, or our treasury income average interest?
Average yield we are getting for the overall the September quarter this year we are around 5.6% of the average gross yield.
Okay. And if you can just elaborate more on Indian Gas Exchange, where there was a debate around the percentage of ownership that we want to retain, and we even made an application for that. So what is the current status where Goel was a prospective buyer with whom we could have sold some stake? So if you can just re-clarify a bit on that.
Yeah, Goel was interested in taking 26% equity and come as a strategic investor in the company. But PNG regulations provide that members can only have 5% equity in the company. So Goel is the largest seller in the company in the country, and they are also our members. So I think they will be able to take only 5% equity in the company.
Okay, I'll come back in the queue. Thanks a lot for answering all questions.
We are in discussion with them, and we are also discussing with a couple of strategic investors who are large players in the gas sector for investment in the company. This is basically to get more value for this initiative.
Thank you.
Otherwise, as on date, it is IEX which is holding 100% equity in the company.
Thank you. The next question is from the line of Lavina Quadras from Jefferies. Please go ahead.
Yeah, hi sir, great set of results. Just two questions from my end. So one is October, what volumes I'm seeing on your website, it indicates very strong growth. So I just wanted to understand, are there any one-offs or maybe it's just a low base effect? That's one. And secondly, sir, any color on states that are contributing? I mean, within all your states, any particular state that is increased contribution or someone that's reduced? Thank you.
October is not one-off. Even September we had volume growth of 45%. Even in the month of May also we had, I think, a similar kind of volume growth. So yes, one is base effect also. Other is, in fact, in the month of October, the per day average volume itself is quite significant. RTM market is also giving almost about 25 MU per day. Green terminate market is another 7, 8, 10 MUs per day. So I think overall volumes are good in the month of October. And I'm sure going forward also, as the demand of electricity, consumption of electricity keeps on increasing, the volume on the exchange should also be good, significantly better than last year.
And sir, on the states, any color over there? Any states which are contributing, which has increased share?
It is participation of all states. Participation of all states. I mean, large states definitely by that them is more like states like Maharashtra or Tamil Nadu, Telangana, Punjab. Punjab, because in case of Punjab, the demand is higher during this particular season. So they have bought large quantum of power. But then buy is more or less spread over all the states, except for the eastern region. Eastern region buy is comparatively much lower.
All right. Thank you, sir.
Thank you. The next question is from the line of Ankush Agarwal from Stallion Asset Management. Please go ahead.
Hello. Yeah, thank you for taking the question. Just two questions. Firstly, if you can give like how much percentage of total short-term market is currently addressable by the IEX, and by what time do you expect like a level wherein IEX will be able to address the entire short-term market? Like we are looking to launch new products in terms of long-term contracts. So will that be able to give you a product portfolio that will be able to address the entire 100% of the short-term power market? If you can clarify that, that would be the first. And secondly, in some of your presentations, I've seen a mention of you looking to market banking contracts as a new product. So just want clarity on here. Is the banking contracts volume which is being currently undertaken by DISCOM, is it separate from the short-term power market? Like, is it over and above the short-term power market, or it is included in the short-term power market? Yeah, that would be.
Yeah. I mean, today, short-term market is almost about 11% of the total generation, and IEX share, exchange share out of that used to be almost about 35 to 40%. But I'm glad to share with you that this year, in the first 6 months, our share has been 50% out of the short-term market. There is a significant increase in our share. So that is one thing good which has happened. Second is, when we introduce these long-term contracts, see the short-term market is consisting of exchange, bilateral transactions, DSM, and the banking transactions.
Yes.
So when we introduce long duration contracts, with that, our reach will be increased from 50% to maybe about 70-75% of the addressable market.
Okay.
And with the real-time market, we are also trying to get some volume from the DSM market. Banking transactions, it may not be possible for us to introduce a equivalent of the banking transaction, but then we are working with the states that they can sell power on the exchange platform and maybe bank that money and use that money to buy power when they need it.
Okay.
So this kind of financial products also, we are working on that. I think with all these things, whether we will be able to get the entire short-term market or not, difficult to say. But then, yes, addressable market size will increase to 11-12% in the next 2 years.
Okay, so just one clarification on this. So with long duration contract, you expect the total addressable power market, the short-term power market would be 70-75% for IEX.
Yes.
And with some variation of a financial contract which would be similar to banking, you expect the total addressable market to be 100% for IEX of short term.
Yes. Out of that, how much we are able to get?
Yes. Yeah, how much IEX will be gathered, that would be a separate thing.
Yeah.
But the addressable market would be 100% post that.
Yeah, you're right.
Okay. Yeah. Thank you.
Thank you. The next question is from the line of Abhishek Puri from Axis Capital. Please go ahead.
Thank you for the opportunity, sir. On the REC market that you mentioned earlier, if it starts from now, would it mean that the demand which is not met for the last 3 months will be pent-up demand, and or is it already met elsewhere and we will not see the volumes coming in, the lost volumes, I mean to say, the last 3 months volume?
No, the demand is not met. There is no other product available to meet the demand. They will have to meet the demand only through purchase of REC. But because of pandemic, many of the states are giving carry forward provision benefit to the distribution companies. Some of the state regulators are doing that. So whether the REC volume will be similar to what we did last year, I think it will depend. We will have to wait and see in the next couple of months. But with the reduction in the REC price, CERC has revised the forbearance price and the base price from 1,000 rupees and 2,400 rupees, which is now down to 0 rupees and 1,000 rupees. So the REC prices are expected to be significantly lower. And with that, we feel that purchase by industrial consumers and captive industries could be significant.
Okay. And this is the exact case why Aptel case was there, right? Because the REC owners had questioned the reduction in rate.
Yes, you are right.
Okay. Okay. So secondly, in terms of the DISCOM short-term open access notification, what is the status now? When will CRC, is it stuck because CRC has not started functioning?
No, that transmission charge sharing mechanism. You are talking about that?
Yes, sir.
That will be effective from 1st of November. The order was issued by CRC much earlier. It is NLDC which is working on the calculation of charges. And what I understand,
okay,
it will be effective from 1st of November. There is not going to be any change in that. It is all administrative activity now.
Okay, the notification is already out on this.
Yeah, notification was issued not earlier.
Okay. And my last question, sir, is on NTPC is participating when we are looking at the constituent. They're participating in RTM, but they don't participate in DAM. Any specific reason why you think they're not? They have started in RTM but not in DAM?
In case of NTPC, entire power is allocated to the states. So states have right to schedule the power. States have right to recall the power on during the day also with 1 hour notice, 1.5 hour notice. But in case of real-time market, as per the regulations which are issued, the unrequisitioned power can be sold by them in the RTM market. So that is the flexibility which they have in the real-time market, and that is why they are able to sell power in the real-time market.
Or any regulation which is pending to get them to the DAM market also? I think there was some the SCED status.
Yeah. I mean, we were doing that policy advocacy that all unrequisitioned power on day-ahead basis should be allowed to be sold in the day-ahead market. That will bring a lot of flexibility in the day-ahead market, but unfortunately, that has not been so far accepted by the regulator and the government.
Okay. Thanks a lot, sir, and all the very best.
Thank you. The next question is from the line of Suraj Ravandar from Prithvi Finmart. Please go ahead.
Hi, sir. Good afternoon. So my question is regarding the market coupling. Is there any update on that draft paper that was issued like 2 to 3 months back?
Yeah, market coupling was an enabling provision which was introduced in the draft market regulation, and there was a public hearing on that. I'm sure you are aware about what was the view of different participants. We also presented our case, and whatever discussions we had during the presentation and subsequent to that. So we understand this is an enabling provision, and maybe this has come mainly because of the ambit. Because in 2018, when the ambit discussion paper was issued, market-based economic dispatch paper, if you want to mandatorily do all transactions through the exchange for the 100% of the power generated in the country, then I think you need one price to settle that. And that is why you need market coupling. So therefore, as a concept, this concept was introduced. Enabling provision was created in that discussion paper. I don't think anything is going to happen in the near future. And I really don't know whether it will be there as a part of the final regulations or not.
Okay, thank you. That was my question. Thank you.
Thank you. The next question is from the line of Aniket Mittal from Motilal Oswal. Please go ahead.
Yes, thank you for the opportunity. So my first question is on the open access front. If you could just let me know what sort of volumes of your total volumes is coming to open access for 2Q and 1H. And this is a note on that. Typically what's happened is over the past 1 year we've seen an uptick in open access volumes. But whenever such a situation has happened, states have sort of increased the additional surcharges, especially given that the power demand situation is pretty low. So, based on your assessment, how are sort of states also reacting to this? Are they increasing the surcharges for open access?
Yeah, our open access volume, there has been significant increase in open access volume during this last 6 months. almost increase of almost about 40% in that. Mainly it happened. Hello, can you hear?
Yes, I can hear you.
Yeah. Mainly this happened because of the low clearing price. Our clearing price during this time was about 2 rupees 50 paisa against 3 rupees 15 paisa in the last year. So increase in open access was mainly account of the low clearing price. State, they are still not encouraging open access. The tariff barriers and non-tariff barriers are still being created. We are working with the states, we are working with the state regulators, but the success is in a very limited manner. Open access volume today is about 23-24% of the total volume.
Okay. So this is for 1H or 2Q? I mean, just trying to understand. This is for the 23-24% number.
30?
So this 23-24% number, is this the number for 1H that you're giving?
Yes. First half is 26%.
Okay.
And if you look at second quarter, it is about 36%. 32%. 32%.
Understood. And so my second question is probably just to harp a bit more on the DSM RTM dynamics over here. Obviously, DSM still continues to have a 2% market share of the overall volume. So just trying to understand from, let's say, a medium-term perspective, what is required for IEX to get that shift from DSM to RTM? Is there a low amount of participation that we're still seeing on RTM? Is that the reason why? Or is there a thinking now that the 1 hour time frame actually may not be sufficient? Maybe that 1 hour time needs to, over a period of time, come down for that shift to happen.
We are working on that. If you look at the DSM price are linked to the day-ahead price. So the DSM, with the reduction in the clearing price in the day-ahead market, the DSM rates also have reduced. So it becomes a final rate only in the event there is an overdraw beyond the limit, beyond the specified limit. So we are doing these calculations for state by state. What is the quantum of overdraw beyond the limit? What kind of rate penalties they have paid under those overdraws? And whether there was an opportunity for them to optimize and how they could have done that. I think these kind of analysis and interactions with the state over the period of time, we will be able to get the volumes from the DSM to the real-time market.
Sure. So it's still you can see increased participation coming from this communication, and that could probably take place.
The participation is not today. Almost every day, more than 400 participants participate in the real-time market.
Okay. And just one last question, if I may. If you could just provide an update on how GTAM is progressing. What sort of response are you seeing on that front, especially in terms of participants? And also with the REC in place, how does that dynamic work for you?
When we started GTAM on 21st of August, the volume was 0.2 MU. And these days we are seeing almost about 9 to 10 MU per day. There is significant, the participation has significantly increased. Almost every day, 40 participants participate in this market. We are seeing generators selling power. And good thing is, the distribution companies like Andhra Pradesh, Karnataka, which have Telangana, which have larger renewable portfolio, power availability is more than the RPO obligation of the state. So they sell that excess power on the exchange platform, that green power, and take advantage of that. Because the clearing rate in the green market is almost about 70-80 paisa more than the rate cleared in the conventional market. So they get that premium by selling power in the green market. Earlier, states were backing down the green generators when their demand was less. Now they have a market to sell that power instead of backing down the generators. So this is a very big development and very positive for the renewable generators also and for the states also.
Understood. That is very helpful. I'll get back into the queue. Thank you.
Thank you. The next question is from the line of Yashovardhan Nerulkar from PPFAS Mutual Fund. Please go ahead.
Yeah, thanks for the opportunity. So the first question which I had was on REC. So, like I heard in the call that there was like you weren't able to trade in that REC, the volumes were low. So could you throw some light on this? That's my first question. And secondly, I just wanted to understand the difference between green termite market and the REC market. Like what are the differences in which market? Like what addresses which market? So if you could just throw light on these two questions. Thank you.
Yeah, green termite market, you are purchasing electricity and also the green attribute of electricity. So you are meeting your energy demand and at the same time you are also fulfilling your RP obligation. Okay. In the REC market, you are only buying the green attribute. For example, the industry which has got its own captive generation, there is a RPO obligation applicable for that industry. So since they have already met the energy requirement from the captive generation, they will have to buy REC from the market to meet the RPO obligation. But if there is a state which is wanting to purchase power and also have to comply with the RPO obligation, they can purchase green power to meet both of them.
Okay. And so about the REC certificates, like there was no volume. So what exactly happened about the prices were lowered by the regulator?
No, the volume is not there because transactions are not happening because of the active stay order. I'm sure this month the order should come and we should see transactions in the REC market also from 28th of October, which is the last Wednesday of the month. So we should see transactions in the REC market on 28th October.
Okay, got it. Yeah, that's it from my side. Thank you.
Thank you. The next question is from the line of Sujit Jain from ASK Investment. Please go ahead.
Hi, Goel team. Sir, a few quick questions. Any update on CEO search? What were the admission and annual fees for Q2? MCX has tied up with M Junction for coal exchange. Now, in energy markets, IEX clearly has the lead and monopoly in spot transactions. So, will it be too much to expect now that we've launched a gas exchange to also take on something like a coal exchange, or IEX is going to have an answer in that segment as well? And if you can quickly elaborate on the states that you just mentioned, that is Maharashtra, etc., on the draft merit dispatch. What exactly that it is and what impact it has on the power market. Thanks.
Yeah. So first is CEO search. That is what you asked?
Yeah.
I think board is working on that. I will not be able to tell you anything beyond that. But there is no, uncertainties as far as the company is concerned. We have somebody who is looking after the company, who was with the company for a long time. So don't worry about that. There will be no vacuum as far as the CEO is concerned. M Junction and MCX. It is very difficult to say what kind of a coal exchange they are talking about, because what I understand about exchange is the exchange which is doing price discovery and also physical and financial settlement. Physical and financial settlement can be done for a commodity in which there is no issue regarding quality and quantity. If you look at electricity or the gas, these are measured by meters, automatic online measurement of the quality and quantity. And it's the same gas which is flowing through the pipeline. In case of coal, I'm sure you are aware what kind of coal we have and what kind of issues we have in the coal market. So whether it is going to be a coal exchange or it is going to be a reverse auction mechanism, what we have on the deep platform. I'm not really aware what is their business model. The third question is regarding annual fees. This fees is for quarter 2 is 4.46 crore. Anything else?
Yeah, and finally the draft merit order dispatch, which you said UP has issued, and Maharashtra and Delhi, they already have that in place. What exactly in terms of doing progress in the power market, what impact it has?
Let me briefly explain you what a merit order dispatch is. Normally, states are dispatching their power based on the long-term contract which they have contracted. So they try to meet the demand through the long-term contracts, and if there is a shortfall in demand, then they purchase power through the bilateral or the exchange. Now, regulator in case of Maharashtra and Delhi, they have said very clearly that when you are setting your merit order, you should also factor in the exchange clearing price. If exchange clearing price is lower than the variable cost of some of your plants under the long-term contracts, you should back down the power from those costly plants and purchase power from the exchange. That is the true merit order, because you are replacing high-cost variable power. Fixed cost is something which is sunk cost you have to pay. But then at least you compare exchange clearing price with respect to the variable cost of different plants. And there are many plants in the country where the variable cost is much higher than the exchange clearing price. So if everybody starts doing merit order dispatch, then in that case you will find that the objective of MBIT will be automatically met through this merit order dispatch process.
Sure. And one quick question on embed. In embed, you will first look at sources where you have the cheapest cost of power, cheapest variable cost. You'll exhaust them, then to the next source, then to the next source. That is the way you'll build the entire architecture at a particular point in time under an MCO. In that pan-India level, there will be saving. But you also have to honor the PPAs. So some of that saving will be passed on to the producers of power. But some of the savings will be retained at the national level. To that extent, if I have a PPA at a price that may not be the best price or remunerative price for the SEB, but I'll still get that price under that PPA, right?
Let me interrupt you. For discussion on MBIT, we need one full good hour for that. I am willing to spend time with you.
Sure.
But let me only tell you in brief that with MBIT, the intention is to dispatch entire power of the country to meet entire demand of the country based on the most efficient manner. So it is a true merit order dispatch which will happen under the MBIT. It is very simple to hear, but if you want to implement this process, there are many complications. So all those complications will have to be addressed. You have to pay the capacity charges, you will have to pay for the energy charges on daily basis, and there is going to be contract for difference. So all those things will have to happen. I think it is as complicated as GST what we are doing now. So very difficult to implement in the country. You also need the consent of the state. So I think it will need time. Not going to happen very soon.
Sure, sir. Thanks.
Thank you. The next question is from the line of Ankit Gupta from Alchemy Capital. Please go ahead.
Hi, sir. Sir, as per your volumes given, our pricing per unit comes out to be relatively lesser than last quarter or even last year. Is there pricing pressure, or is the pricing different in RTM market or some other market?
No.
Sir, to interrupt, but your audio is clicking up, sir.
Yeah, okay.
As far as the transaction fees is concerned, it is constant. It is same last year and this year. I don't think there is no change in that. There is no reduction or any incentive or discount in that.
But sir, our volume growth is 13%, but our revenue growth is only 5%. And why it is so?
It's because REC volume has not happened. You are seeing only electricity volume growth. You are not seeing the REC. REC has not happened.
Yeah. Okay. And second, sir, what are the gas volumes which we did this quarter?
Pardon?
Gas volumes in the IGX.
IGX volumes are very low, as I told you.
Yeah.
That we are working with the government and regulators to put enablers in place.
Okay.
So all those things try to happen. We are not really today worried about the volume. I think for the next couple of months we'll have to work aggressively with the government to put these enablers in place. And thereafter, I'm sure there is also opportunity.
Got it. Thank you, sir.
Thank you. The next question is from the line of Pawan Kumar from Ratnatraya Capital. Please go ahead.
Sir, REC volumes contribute what portion of our entire revenues?
REC volume constitute almost about 12-13% of our revenue. I mean, our volume, you can say.
Okay. And regarding the other expenses part, which fell down by 52%, is 8.5 crores other expenses, is it a sustainable kind of run rate?
I request Mr. Vineet Harlalka to respond to this question.
Hello?
Yes, sir.
Yeah. Other expenses, if you look into it, there are the significant fall reduction if you see in the expenses in comparison to the Q1. But mainly it's because of the CSR expenses, because the 5 crore contribution in the PM case which the company made during the Q1. That is the major differentiation. And secondly, because of the COVID restrictions, so a lot of the activities are on hold. So when the opening up happens, so some costs will definitely go up on this side, but not significantly.
Okay. Wait, any idea what would be the sustainable run rate that we can take on this particular cost?
If you look into the average, the other expenses will be in the range of 5 to 6 crores.
Okay, fine.
Thank you. The next question is from the line of Saloni Jindal from Everyday Capital. Please go ahead.
Thanks for the opportunity, sir. So I wanted to ask, would market coupling be a threat for the exchange in the future?
Can you repeat the question, please?
Would market coupling, if introduced, be a threat for the company in the future?
Market coupling introduced, yes. So the point is, when will market coupling get introduced? If we are introducing market coupling with the MBIT, there is no threat. Because with the MBIT, today exchange volumes are 60 billion units. After MBIT, which will multiply by 25 times to 1400 billion units. The entire generation of the country will happen through the exchange. So I don't see any threat in that or any challenge in that. But in the existing market of 5%, there is no case for introducing market coupling. Tell me what advantage one is going to derive by doing the market coupling in the existing market. Existing market is a voluntary market. MBIT is going to be a mandatory market. In the mandatory market, you need single price discovery. In a voluntary market, you don't need a single price discovery. We still have NSE and BSE. There is a price difference between the stock price between these two exchanges. We still have NCX and NCDX. So these kind of variations will be there. I don't think regulators are thinking of coupling those markets. So existing voluntary market, I don't think there is any case for coupling it. And with MBIT, we have no issues. In fact, it is a big opportunity for us.
Okay. Thank you, sir. Thanks for answering.
Thank you. The next question is from the line of Utsav Atesira from Vigilant Investor. Please go ahead.
Hello, sir.
Hello.
हाँ सर, आप हिंदी में कंफर्टेबल रहोगे?
हाँ जी, हाँ
ठीक है। हाँ, अभी जो हमारा जो पावर का वॉल्यूम है वो टोटल मार्केट का 3% ही ऑर्गेनाइज मार्केट में ट्रेडेड होता है, बरोबर है?
हाँ, नहीं आपके तो 5% मिल है।
ओके,
5% मिल है,
5% ना? हाँ, तो वो हम 5 का 10 करने के लिए हम क्या प्रोग्रेस में है अभी?
मैंने आपको बताया ना कि अभी हम जो है, जैसे ये रियल टाइम मार्केट है, लॉन्ग ड्यूरेशन कॉन्ट्रैक्ट है, ये सब काम कर रहे हैं हम। और ये सब जब रियल टाइम मार्केट ऑलरेडी चालू हो चुका है और इस मार्केट के अंदर में वॉल्यूम भी अच्छा हो रहा है हमारा, और जब हम लॉन्ग ड्यूरेशन कॉन्ट्रैक्ट वगैरह लॉन्च करेंगे तब इसमें एड्रेसेबल मार्केट साइज हमारा जो है ये 5% से 10% बढ़ जाएगा। अब उसमें से कितना हमको उसके अंदर में हमारा शेयर बढ़ेगा, दैट ओवर द ईयर वी विल सी दैट, बट देन मार्केट साइज विल इंक्रीज फॉर एक्सचेंजेस.
Thank you. The next question is from the line of Kunal Gandhi from Banyan Tree Advisors. Please go ahead.
Thanks for the opportunity, sir. So, sorry, I'll join late. My question would be repetitive, maybe repetitive. Wanted to understand and have a sense on, how should one read into the employee cost in this quarter? Like, is it a one-off, increase, or it is on the it is a more sustainable run rate going ahead?
Yes, there are few components which are one-off, but otherwise also there was increase in employee cost because of launch of new products. So we have taken additional manpower. But I think going forward, it is going to remain in this range.
Okay, that is 12 crores per quarter. Hello?
Yeah.
Sure. And the second question was on green TAM. So when we look at the volumes, this would be classified under the TAM itself, right? If I were to look at the, if I were to track the daily or the monthly volumes, so it would be classified in the overall TAM, right? Or they would be in terms of classification?
Cannibalization of TAM has happened because of RTM. So TAM volume has shifted to RTM. Green club-head market is a market for the green power. I mean, you can compare it with REC, but in case of the green market, it is energy plus green attribute.
Okay, sure. What a point. Okay, thank you.
Thank you. The next question is from the line of Swarin Maheshwari from Edelweiss Securities. Please go ahead.
Yeah, sir. Good evening. Thanks for the opportunity. So, two set of questions. First, anything on the derivatives platform that we have planned? Anything on the shape and the form of the derivatives platform?
Number one, derivatives in the electricity can be introduced only after the issue is settled by the Supreme Court. Because today, derivative will be regulated by whom? That is the issue under that case. So once Supreme Court disposes of that case, in fact, SEBI, CRC, Ministry of Finance, Ministry of Power, they have all decided these issues. Minutes have been signed and they have been filed with the Supreme Court that derivatives will be regulated by SEBI, and long duration delivery contracts will be regulated by CRC. So once that case is disposed of by Supreme Court, then SEBI will be able to introduce financial contracts for in electricity also. And these will be introduced on SEBI regulated exchanges. But you know, the advantage of that will be that in electricity, if you see, there is a lot of volatility in the price. So user will be able to hedge his position in the derivative market and take delivery in the spot market. So a part of the bilateral contracts will then get shifted on the exchange platform.
Right. So the hearing was supposed to take place on 8th of October, but we haven't heard anything on that.
Yeah. Before 8th October itself, and the hearing got shifted to December.
So this is postponed to December now. Okay.
Yeah.
All right. So sir, that actually means that we were looking to launch LDC by December end. So now that actually looks a bit possible.
Yes, you're right.
Understood, sir. Understood. Just second question, sir. This is actually on GTAM. Now, sir, right now we are at about 1 gigawatt. Now, what according to you would be the changes required for the GTAM market to go from 1 gigawatt to say something like 15 odd gigawatt? We do understand that there are new policies which that is actually getting discussed with respect to higher capacity or higher merchant capacity allocation, so something like 80-20 with respect to new capacity. But can the existing capacities, can you see a ramp up? Is it possible that from 1 gigawatt, which is 10 million units per day, can it go to something like 15 odd gigawatt over the next few years?
So one is in the green pyramid market, our transactions are 1 gigawatt in the peak hours. The transactions are mainly happening during the daytime. So average, if you look on daily basis, the volume is about 9-10 million units. Today, there is no generator which has got merchant capacity. The entire renewable capacity is tied up under the long-term contract.
That's right.
So the participation is more by the distribution companies. The distribution companies who have got surplus power generation, renewable power generation beyond the RP obligations, they are selling power on the exchange platform. But then, if you look at the clearing price of the GTAM market, this price is about 2 rupees 40 paisa. It is a very lucrative price considering that price discovered under the bidding route for the renewable generators, which is around 2 rupees 50 paisa. So I'm sure looking at this price, maybe in future, a couple of IPs will set up capacity under the merchant route, or they will keep 10%, 15% of their capacity for selling the market and try to take advantage of this market. So this is how the market will get developed. And ramping up from 1,000 megawatts today to maybe 10,000 or 15,000 megawatts will take some time. I mean, we have created a market, and people will now see what kind of value they can take out of this market and make investment for selling power in this market.
Yeah,
I think next 2 years.
So in GTAM, right now we have more of buy flows rather than sell flows, is it?
Yes, you are right. But on the sell side, we are seeing active participation of the state distribution companies which have surplus power. And today it is Karnataka and Telangana who are participating, but in the near future we are expecting even Andhra Pradesh or Gujarat or Rajasthan or Maharashtra who have large renewable capacities participate in this market.
Got it, sir. Thank you so much and wish you all the very best.
Thank you. Thank you.
Thank you. The next question is from the line of Ankush Agarwal from Stallion Asset Management. Please go ahead.
Hello. Yeah, so just one clarification on my earlier question. So the banking contract value, the volumes in the current short-term power market annually would be somewhere around 30-35 billion. Is that understanding correct?
Banking transactions?
Yeah.
No, banking transactions volume are, I believe, about 10 to 12 billion units only.
Okay, only 10 to 12 billion units.
Yeah. Rest of the volumes are in the bilateral contracts.
Okay.
Which are about 2 days.
Okay, thank you. That will be
Mr. Ankush Agarwal, we are unable to hear you, sir.
Ma'am, my question is done. You can move on.
Okay, thank you so much. The next question is from the line of Manoj Kumar from IDFC Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. So my question is on the RTM market. You explained about how RTM is cannibalizing other segments. But if you could throw more light quantitatively on what happened in this quarter and moving forward, what do you outlook on this? What is your outlook on this?
See, RTM is not on account of cannibalization of other markets, entire volume. But I told you that term-ahead market, good part of those volumes are shifting on the RTM market. But if you look at the total volume what we have done in the RTM market, that is significantly more than what we did in the TAM market. So I think almost about 60% of the RTM market volume is a additional volume which we have got. And quarter 2 RTM volume is how much? We did about 2.35 billion units in the RTM market in second quarter. So, I mean, RTM market is definitely going to give additional volume.
Oh, got it. So this was my quantitative light into like how much it is selling.
We are working with the distribution companies to shift the DSM volume to the RTM market. How can they take advantage of the real-time market to reduce their cost under the DSM? So we are working with them. Let's see what kind of success we get and how we are able to provide value to our distribution companies.
Got it. Thank you so much.
Thank you. The next question is from the line of Rohit Balakrishnan from Vriddhi Capital. Please go ahead.
Hello.
Yeah, hello.
Yeah, hi, sir. Sir, I just had two questions. One was, so while our share in the short-term market has increased over the last few years, but as an overall market, short-term market has been stagnant at about 10%. I mean, this has been the case since our listing in 2008. So I just wanted your views, what is going to change that and what is going to increase? I know we are introducing market products in the long-term market, etc., but just talking about short-term, what do you think can take this 10% to probably 15, 20 and more, which is also seen in the advanced market? So that was the first question, and probably I'll also list my second question is, you mentioned earlier to a participant's question that this market coupling is not a risk if ambit comes in. So if you can probably elaborate a bit more on that, that will be helpful.
Yeah, short-term market is hovering around 10%, 10-11% from the last, I think, 4-5 years. But government is seriously working in creating more liquidity in the short-term market. There are few things which are happening now. One is long-term PPAs are not happening. So whatever is the incremental demand, either it is met by the existing long-term contracts or it is going to come to the short-term market. So the short-term market volume with the increase in the demand will definitely go up. It's unfortunate that last year the increase in demand happened only by 1% and this year the demand increases. In fact, there is a decline in the demand. And we may end the whole year maybe at the level of the last year or maybe lower than that. So that incremental demand has really not happened in these 2 years. That is why the volume in the short-term market has not increased. Second is old plants are now getting phased out. Government has already decided that the old inefficient plants will be phased out because they are not complying with the environmental norms. So when those plants are phased out, these plants are supplying power under the long-term contracts. That demand also will come to them. A part of that demand also will come to the market. So I think these two, then cross-border transactions, which should happen anytime. I mean, CRC has issued regulations. The procedure is to be issued by the CA. I think I understand that is also under the final stage. So if that happens, that also will bring some volume to the short-term market. I think these are the drivers for increasing volume in the short-term market. This should take the short-term market from 10% to 15% in the next 2-3 years.
Got it. And sir, on the other question on market coupling, and you mentioned if ambit comes in, that's not a big issue. If you can just maybe explain it in more detail.
What I told is that in the present market model, which is a voluntary market, participants, there is no compulsion on them to purchase power from the market, from the exchanges. It depends on their demand and supply position. They can contract that shortfall through the bilateral market also or through the exchange. And they can purchase power from any of the exchange. It is a voluntary market and it is only 5% of the total generation happening through this market. And IEX is already having 99% kind of market share in the day-ahead market and real-time market. So the competitive price discovery is already happening. So I don't think we are going to get any additional value by doing market coupling in the existing model. And there is no need for doing market coupling in the existing model. But if you are going to implement MBIT, in the MBIT, entire power of the country is going to get dispatched to the exchanges. If that happens, then you need a common clearing price. You cannot have three clearing prices of the three exchanges irrespective of the volume of those exchanges. So since you need a common clearing price, I think, and market coupling makes some sense if you want to implement MBIT. And if MBIT is implemented, then the entire volume, which is 1400 billion units in the country generation taking place, the entire generation will come to the market. So then there is no challenge. I mean, we are doing today 60 billion units, and even if we get 50% of the market share, it will become 700 billion units. So that is what my point is.
Got it. And so just one final thing on this REC, you said that probably at the end of this month the trading should start, but given the price has been so low, so would you think, I mean it's now the generators, would they continue to is there an alternative that they can, because the price is not remunerative, is what my understanding is. So would want your view on and what will happen post, even if Apple comes out with an order.
The point is, existing generators who are selling in the REC market, the green attribute in the REC market, what option they have? They have no other option. They have to sell the green attribute only in the REC market. Earlier also, when the REC volumes were higher, the sale volumes were higher, the clearing price used to be only 1 rupee. 100 rupees for one REC certificate.
Right.
So at that time also they were selling it. And for new capacity, under the bidding route, these IPPs are selling renewable power at a rate of 2.50 paisa. Solar and even in case of wind also the rate is similar. Conventional power market clearing price itself is more than 2.50 paisa. On top of it, you are getting a premium of another 60-70 paisa. So it makes a lot of sense for the green generators to set up some capacity for sale in the market also.
Sure.
I think in future, irrespective of the price, there is value which they have in either in the green term-ahead market or in the REC market.
Got it. Fine, sir. This is very helpful. Thank you very much. Thank you for answering my questions.
Thank you. The next question is from the line of Nikhil Upadhyay from Securities Investment Management. Please go ahead.
Yeah. Hi. Good afternoon, sir. Thanks for the opportunity again. And appreciate you explaining each of the points in detail. I just have one question, which is based on the explanation you gave between the REC and the green TAM. Now, would it be possible that the people who are, the generators who are selling on the REC, they can sell the generation and the REC both at the green time market? So whole of the REC volumes can shift to green time. Is it a possibility, or would you say the split could remain at 80-20?
It depends. Today generators who have set up capacity under the REC market, they have contract with the state distribution companies for supply power to the DISCOMs at the average cost of power purchase of the distribution company. And the green attribute they sell, they get REC for the green attribute and sell that REC. In future, it is left to the IPPs whether they want to sell power in the renewable market, in the GTAM market, or they still want to sell power to the distribution company and take REC for the green attribute. But looking at the market clearing price and the payment position of the distribution companies, I'm sure generators will be inclined to sell power in the green market as energy and a green attribute, and thereby they will be getting better realization and also the prompt payment.
So just one last point which I want to understand. So if we say a person is selling green REC on the REC platform and is selling power to the distribution company, the combined price which he is getting, would that be higher than what he is getting on the green time market as of now?
It depends.
Because that will define upon. Yeah, sorry.
It depends at what time the contract was signed. If the contract was signed 5 years back, at that time the rate for the renewable power itself was 5 rupees per unit.
Yeah.
But today, a state generator, a state distribution company will not sign a contract to purchase power at a rate of 3 rupees or 3 rupees 50 paisa. Under the bidding route, the rate is 2 rupees 50 paisa.
Got it.
They will like to purchase green power, which has got basic both energy and the green attribute. So I think capacity addition under the REC market is not expected in future. Capacity addition will happen under the green market now.
Okay. Thanks a lot, sir. Thanks for the deep explanation. Thanks a lot.
Thank you. Well, ladies and gentlemen.
Going to be 4 o'clock. Can we?
Yes, sir.
Limit our 2 questions now.
Sure, sir. That was the last question for today. You may give your closing remarks.
Thank you very much for participating in this earnings call. I mean, we have discussed. I have nothing more to say. I can only say one thing, that last 2 quarters were difficult time for us, for the whole country during this, because of the COVID. There was contraction of demand in the country. And on exchange also, initially we were apprehending that the volumes will also decline. But because of the very competitive clearing price, we could achieve a volume growth of almost about 13%. And we also ensured uninterrupted operation of the gas sector of the power exchange, ensuring safety of our employees by doing digital transformation of the operations. And going forward also, I mean, if we achieve 13% kind of growth under difficult times, unfavorable conditions, I think going forward when the economic activities are now improving, I'm sure that our growth will be much better. That's all. Thank you.
Thank you. On behalf of Axis Capital Limited, this concludes this conference. Thank you all for joining. You may now disconnect your lines.